May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily, Friday, the 4th of November. All right, friends, welcome. So pound dollar yesterday, right? The BOE, hope you paid attention to it. The thing that stood out for me the most was we weren't surprised by the reading. Obviously, inflation high, a concern around that affecting employment. But most importantly, when the BOE governor said that the future rate hikes have probably not been priced in. Okay, so that's a very solid indication in terms of what you're doing with the pound dollar. Before we jump into pound dollar, let's look at euro dollar. So nothing's changed fundamentally. What we are paying attention to, though, is news, right? So you've got some medium and low tier news, some high tier news, some European news, specifically looking out for US news, inflation-related US news. We're going to see if we have any of that in the docket today. Lots of news from various countries in Europe. So you can see that today, a rather important day, non-farm payrolls, okay? You know that the Fed are paying attention to that data. Average hourly earnings, all this data over here, very, very important. Unemployment rate, etc. Okay, so today's an important day in the market for the US. Naturally, it's non-farm payrolls. So keep an eye on that. And as we start getting more and more of this inflation data, all the market's doing is just paying attention to it. I think, is the market data dependent? Well, yes, it is, because the Fed has said they're paying attention to data, but the Fed also said that they're not done hiking and that there's a lot more hiking to go. But what the Fed says and how the market responds are not necessarily the same things. And so in data-dependent markets, you know, we tend to get low volatility for moments, then the news comes out, and then suddenly the market realizes, okay, cool, we're going in this direction. So just be aware of that, okay? But ultimately, in terms of your overall fundamental bias, there is absolutely zero reason to be buying the euro dollar at the moment. None whatsoever, okay? Looking at the pound dollar, I mean, absolutely. With the governor yesterday saying that future rate hikes have not been priced in, there's a good reason to be selling the pound dollar as well. Okay, and you can see here from a fundamental perspective, no reason to be buying pound dollar. In terms of some important news coming out of the UK today, we got a BOE speech, and we've got some medium and low tier news. So pay attention to that. Then in terms of USDCAD, we're still bullish. Okay, strong buy. Well, we're looking for that role reversal on USDCAD. We'll take a look at the charts in a moment. We got some important Canadian news coming out of Canada later today. And that'll be at the same time as the non-farm payrolls in America. So pay attention to that. Aussie USD, we remain bearish. Okay. And obviously no news coming out of Australia because that session is much later in the day. In fact, the last session was last night. So still bearish on the Aussie USD. And in terms of the Kiwi dollar, still neutral. We'll leave that alone. Japanese yen pairs, we continue to pay attention to these yen pairs because of where they are from a positional perspective. I'm looking for opportunities to sell the Japanese yen pairs or to buy Japanese yen. I'm looking for a change in fundamentals for that to happen. So we can see here, Aussie yen, CAD yen, Euro yen, pound yen. Has there been a change in pound yen? No, still neutral. And Kiwi yen, okay? All the yen pairs, the Kiwi yen is still a buy, but the rest of the yen pairs are neutral. And of course, you know, Kiwi yen right now is completely out of position for any buying. So leaving that alone. Jumping into our charts, let's start with Aussie USD. So we can see they're coming up, Aussie USD, price coming down. So yesterday's close at a monthly M2. All right, cool. We know we're bears, so we know we can't sell over here. We're looking for price to close some kind of resistance level on the Aussie USD, and the price action is not amazing. Going to be honest with you. The fact that price failed to make a lower low, price not coming up. Are we going to continue going higher? Are we going to come to the top of the range? Are we going to bounce around here for a while? We'll have to have a look and see. Okay. We can clearly see that everything is sideways, even from a weekly perspective. So I've got no real reason to look for opportunities on an H4 time frame because I don't have anything going on the daily. If I did look at the H4, you can see there, look at that sideways market. Okay, looking for roll reversals, not getting any right now. So I'm going to just stay away from the Aussie USD for the moment, okay, until things make a bit more sense on the daily time frame. Then in terms of euro dollar, still in the trade from earlier this week. And looking at in terms of where we are right now, price coming down, you can see lots of red candles. Yesterday closing down here. I don't see price closing at any bullish integrity, i.e. bottom of the range in a range or bullish roll reversal in a trend. I see price consolidating. There is a concern in terms of being in this trade. Does price pull all the way back up, knock me out, and then go down? If that happens, that happens. I have moved my stop to MAP. Reason being because of this lower high over here that then produced this over here. So paying attention to this and simply saying that I'll only get out of this trade if I see an indication of bullishness. What will the indication of bullishness look like? Well, if price is ranging, if market's ranging, price closing at the bottom of that range could be, well, is an indication of bullishness, but not necessarily long-term bullishness. What I'm ultimately looking for is a higher high, higher low. Fundamentally, I've got no reason to get out of this trade. I'm not really worried if I just make MAP on this trade, and I could close it right now and make a lot more, but that's not what I'm worried about. The money is irrelevant to me. What's important to me is cultivating a way of behaving that where I can consistently produce results. And if I'm bearish and fundamentals are bearish and I've got no indication of bullishness in this chart, then I should have no reason to get out of the trade. Okay. And if I behave the same way down here as I would have up here, then, sometimes price might be low. I can get knocked out. Fair enough. But when that translates to being in a position like this, I won't end up closing a trade prematurely. All right. I like position. I like portfolio building. I like, having trades that run a very long time. Yes, absolutely. Euro dollar, very much late in the game down here for sure. But fundamentals are what they are. And again, I don't have any technical reason to be getting out of this trade. As you can see on the daily time frame, I don't have price closing down here. I don't have price coming off of the monthly M1. Of course, we are at bullish buy zone. Fundamentally, definitely bearish, but there are always bulls in the market. Okay, we'll have to see what today's non-farm payroll does for price. Ultimately, from an H4 perspective, I don't see any bullishness here. What does bullishness look like? Well, has price broken resistance? Has resistance become support? That's basically what I'm looking for, right? Of course, price can come down, make a higher low, and start moving higher. In that situation, I've got to ask myself the question, has price broken resistance and has resistance become support? If the answer is no, I don't close the trade. And I make peace with the fact that I might only get MAP off this trade. And I haven't even locked in at MAP. I mean, I've only locked in like 30 pips. Okay. Not a bad MAP, but I would like to at least lock in 50 pips on this trade because that's the risk I took when I opened the trade. Okay. So I've got to make sure that if I make MAP on this trade, I at least make the amount of money I was risking when I went into it. So at least I've got a 1-to-1 risk-reward ratio, which will help in future situations if I lose trades in the future. So at this present moment in time, I'm not going to move it down to 50 pips because what that'll do is it'll place me in a dangerous position. I've got it above this previous high because I've now got these two resistance levels protecting price. And if price had to break those two levels and come all the way and knock me out, then I might as well get out over here. Getting out over here, getting out of break even, getting out up here is all the same thing for me because price has then broken some levels of resistance that price should have not have broken. It also would have broken 21s and 55s and all kinds of things. I realize at this time that we have not made a lower low, okay? However, at this point in time, I wanted to fib that perhaps there are bulls out there that are trying to buy. I'm just standing on the side of fundamentals. I'm looking at this from a fundamental perspective and saying, I do not see any reason for anyone to be buying the euro dollar right now. Okay. So that's euro dollar. No trades today, no further trades. Certainly would never, ever sell so close to a profit-taking zone. It just doesn't make any sense whatsoever. If you're selling down here, you have to ask yourself why you didn't sell up here. Over here in bearish territory, a place where bears exist, it's high, it's at resistance. Selling down here in bullish territory, flip that switch. Sell high, buy low. And of course, have fundamental bias behind you when you do so, okay? So leaving euro dollar alone, again, mentioning pound dollar, very keen to get into some pound dollar trades just based on what the governor said yesterday. Unfortunately, earlier this week when price came up and closed at that roll reversal, I was not in front of the market. I was out at that time. I don't trade New York Stock Exchange session. I'm already at CrossFit at that time of the day. But the New York session price was down here. It hadn't closed at resistance yet. And you can see it broke that resistance there. And so I would not have taken that trade at New York. If you got into that trade, then fantastic, right? I don't see any reason why you'd want to close that trade unless you get an indication of bullishness lower down. And perhaps you've moved your trade to map just slightly above this previous high over here. Okay. But the fact that we've got further rate hikes that are coming up, which have not been priced in, tells you that there's lots of room for pound dollar to go further down. Maybe it is data dependent and maybe we've got to pay attention to the news, but that's okay. When you see roll reversals or dynamic resistance, so far as moving averages are concerned, or even pivot points, just make sure you verify everything on lower time frames. You have no reason not to be shorting pound dollar. Okay. I mean, there's still plenty of space in this. If the governor, if the guy came out of his mouth, right? He said, the future rate hikes have not been priced yet. Okay, these guys seem to be very freaked out by high inflation, and I think their big concern is what it's going to do to debt and to the unemployment rate. All right, so pound dollar, no trade today. Currently at a profit-taking zone. I can't sell down here. Okay, this is that time of the week where if you did your homework at the start of the week, and you were in front of your charts, and you were supposed to be in front of your charts and took the trade where you're supposed to take the trade, right now what you're doing is you're managing that trade. You're not taking a trade, you're managing that trade. You're looking at the market and saying, do I need to get out? Now, one way that you could look at getting out of a trade is if you were a bull, would you buy this? And if your answer is no, then you have no reason to close your trade. And that's what I mean by I would only close my euro dollar trade if I see an indication of bullishness. I want to stay in a sell as long as things are bearish, okay, fundamentally and technically. All right, so pound dollar, nothing to do today. We had a profit-taking zone and leave that alone. Not even interested in looking at the 21 EMA or anything. I'm just absolutely do not sell down here. Kiwi dollar, neutral, leave that alone. USD CAD, okay, bouncing up and down. All right, we're looking for that roll reversal. If you took, we still spoke about bottom of the range being okay, cool. But in terms of a roll reversal, you can see here, I haven't really got price closing a roll reversal. We came close over here, but no cigar. And now price is bouncing up and down. I still see this as very much market. It's very much consolidating. Okay, so because of that, if I look at the daily time frame, think about a range. Where would you buy? Well, if you're a bull, you're looking to buy at the bottom of the range. Okay, there's your bottom of your range for you. All right. If you are a bull, then you're waiting for a breakout and a pullback to the top of the range. One of those is a range trade, bottom of the range. One of those is a trend trade, pullback, top of the range, and then a trend starts. Okay, decide which one you want to take. I prefer not trading ranges because I don't like to have my liquidity in low volatility situations. It also doesn't confuse me. If I only trade trends, then at least I know that there might be times when I do not trade, but when I do trade, I should get a significant return on my investment because trends run. Okay, ranges do not. So USD CAD, nothing to do today in terms of buying. You can see price up here in the bearish sell zone. I have no business trading up here. Okay, the only reason why you trade out of position is if we got a beautiful trend and you're coming off of a 4-hour 21, or you got a significant roll reversal, and you have to verify that bullishness. Otherwise, you have no business buying up here. Remember, the number one rule of trading is buy low, sell high. And I want to add something in there. If you are a bull, buy low. If you are a bear, sell high. How do you know if you're a bull or a bear? Fundamentals, baby. All right, cool. So that's USD CAD, leave that alone. Okay, all the yen pairs, I'm not even looking at them because they're neutral and fundamentals. I've got no business being in anything fundamentally neutral. I'm going to leave those alone. And I'm aware of the fact that there might be opportunities on those yen pairs. I'm aware of the fact I might be missing out on them. I don't care. My process is I start with fundamentals. If I don't have a fundamental bias, then I have no business trading that asset class. Okay. So today very much is a case of, for me, sitting back, managing this trade, having to see how price develops in this euro dollar. But ultimately, I've got no way of selling euro dollar when it's closed down here. From a pound dollar perspective, I've got no business selling down here to profit taking zone. So today very much is a day of, okay, well, thank goodness I did my work earlier in the week. And so I'm absolutely able to sit on my hands today and just see, is there any more juice in this lemon? Okay. And that's the benefit of getting into trades when you're supposed to get into them and knowing how to manage them later on. Right? That's what trading is. All right, cool. So I wish you luck in today's non-farm payrolls, the Canadian news as well. There's some BOE news, some European news. There's lots of news coming out today. Keep an eye on the data slate. And remember, stay disciplined, stay patient, stay liquid. I thank you so much for your time this week. I've had an absolute pleasure presenting to you and going through these charts with you. It was a really, really great week. We survived both a Fed decision and a BOE meeting, and we're still in a trade. Isn't that fantastic? So I look forward to seeing you next week. Let's see, maybe there's more opportunities next week. If we don't come back every single day and look at the opportunities every single day, then how can we ever expect to be consistent? If we aren't consistent, we cannot be confident. If we're not confident, we're never going to make capital. So let's come back and do that next week, friends. Have an amazing weekend. Thank you so much for your time. All the best. Goodbye.